The last time the Fed funds rate got dropped in the middle of September, the average 30-year fixed rate loan around the US to buy a house. I'm John McPherson. Here, we're going to get into the shortest economics lesson that you never had, maybe never wanted, what it means for borrowers in this market if you're out shopping for a house, and what happened last time when the Fed funds rate got dropped by 0.5% in the middle of September. I don't think you're going to believe it. Uh, they dropped the rate by 0.5%. Everybody was thinking, well, the Fed funds rate's going to get dropped. It's going to save everybody money. Interest rates are going to go down. What really happened is the US Treasury yield, and we'll skip that little mini economics lesson because that would get really boring, but the cost of borrowing for the US government on a 30-year term went up by 0.7% over the last month and a half since the Fed funds rate got cut by 0.5% in the middle of September. And then the mortgage lending rates on average around the US for a 30-year fixed rate loan, they went up by 0.9%. So that doesn't seem to make any sense. Now, on November 7th, today's November 6th, the election was last night. On November 7th, the Fed is expected to drop rates by 0.25%. So does that mean that mortgage lending rates will go down by 0.25% tomorrow? No. Will they go up by 0.5% over the next month? Maybe. Will they go down by 1%? Maybe. We'll see. They're up today. It's the day after election. Rates are up a tiny bit. Treasury yields, so the cost of borrowing for the US government, is up about 1/8 today. So who knows what's going to happen to mortgage lending rates over the next month or so. That's all set by supply and demand for money, et cetera, et cetera. But what it means, so hypothetically, if you're out in Portland's real estate market and let's say you're looking for a house and you're going to borrow $1 million to buy a house, an increase of 0.9% in the 30-year average fixed rate loan around the US over the past month and a half means that your monthly payment's going to be almost $600 higher. It's about $595 a month higher than what it would have been if the rate were still down around 6 1/8. It's a little bit over 7% right now, according to Mortgage News Daily. So what it means in terms of how much money you need to make to qualify for a loan, of course, talk with your lender, but very, very roughly as a guesstimate, maybe you'd have to make about another $16,000 or $17,000 a year to qualify for that same $1 million loan. So of course, sellers in Portland are going to have buyers out looking for properties, and if they're borrowing money to buy a house, it's going to cost them more as concerns the monthly payment and interest rate. I'm John McPherson. Call me anytime if you want to talk about Portland's real estate market. Call me.